Welcome to Asset Yield, the podcast series of Kinstellar's Asset Solutions sector, where we speak with principal investors, advisors, and funders in the world of non-performing and non-core assets of all classes, bringing you frontline market insights in real time. Welcome to Asset Yield. We're here this afternoon with Bryan Turner, who comes to us from Bulgaria by way of Kansas. Bryan is a director at Resolute Asset Management. Bryan, delighted to have you.
Hi, Denise. Thanks for having me on. This is a nice initiative.
Before we get down into the nitty-gritty, how does a nice boy from Kansas end up in Bulgaria, and what do you do at Resolute Asset Management?
The story Kansas to Bulgaria is a longer one than this podcast will allow, and usually requires something a bit stronger than green tea to sip on while the story is being retold. Long story short, I arrived in 2005. I started working shortly thereafter for an American property developer, bounced around from property developer, spent a bit of time after 2008 working in Paris for a few years just to improve my French, and then moved back to Bulgaria where I was working for another property developer, and we were building and developing and managing shopping malls and residential complexes in Bulgaria and a little bit in some of the neighboring countries around Bulgaria. I joined Resolute in almost exactly 6 years ago, maybe even to the day.
Congratulations. Happy anniversary.
Thank you. Thank you very much. Resolute at the time had landed a large multi-year mandate with a Greek bank in Bulgaria and Romania. They needed apparently an American from Kansas to run their Bulgaria office for them. Resolute Asset Management, based in London. We are distressed real estate asset managers, and our clients are typically banks, private equity, institutional investors who are, if you're a bank, you're either, let's say, an unwilling owner of real estate problems, either in the collateral form on the non-performing loan side, or once those have been onboarded onto the bank's balance sheet, the real estate owned REO field. So we work with banks both on the loan side, loan and collateral side, as well as on the REO side. And then we also work with institutional investors on providing underwriting and portfolio management, and then portfolio pricing. Then assuming our client wins a bid for the portfolio, we then like to work with our clients on managing and monetizing those portfolios on their behalf. These can be assets, anything from plots of land to underperforming shopping malls, Class A office buildings, and small apartments in the middle of nowhere. So everything in between.
Bryan, thank you for that. You have a very interesting perspective because you have worked on both the prime asset side of the business as well as now the distressed asset side of the business, which gives you a very holistic view of the market in general. Moreover, as I understand that while you are based in Bulgaria, you have somewhat broader geographical scope in that you also cover the Western Balkans, in particular Serbia. Is that correct?
That's correct. We don't yet have an office in Serbia, but we have, on behalf of various clients, done some work in Serbia. We've done some work in Albania. We've participated in a portfolio underwriting exercise in Croatia, well, across the region, actually. I do get across to those jurisdictions quite a bit, and we would love to have an office in Belgrade, but it's going to be mandate driven. We're not going to open an office and hope work comes in.
Before the world economy ground to a halt with Corona, or before the world slipped off of its axis, maybe you could give us a sort of bird's eye view of how the market was going in Bulgaria in particular, but also just generally in the region that you were covering, particularly in the distressed asset area.
So prior to COVID, we were trucking along, preparing our portfolios, getting the pricing right, getting them legally cleaned to be sold, getting them physically and technically repaired and cleaned.
You and I work in this sort of gritty world, but not everybody listening will understand exactly what you're doing. So I like the concept that it's literally cleaning, but what exactly are you doing to these 1,000 brick and mortar pieces of real estate?
So we will take the entire portfolio and segment it based on asset type, asset location, based on that asset type and that asset location. We call it liquidity scoring, and then that helps us come up with our pricing. We start with our pricing, but then we're physically inspecting each one of these assets as well, because sometimes they've been damaged by the previous borrower on their way out, or just because they've been a part of the bank's books for 10 years. After that much time, you need to clean them. You need to physically repair them. Sometimes there's broken windows. And just to give access to brokers and buyers, we do physically prepare the portfolio.
So your portfolio, first of all, ranges from studio flats, residential studio flats, all the way to office buildings and factories and, commercial space, logistics centers and so on. And you're doing not only desk valuations, but you're actually physically going and turning around the assets. And so as we came into this unusual period, you seem to have been quite busy, it sounds like.
Yes, it was busy because not only are we doing a desktop analysis of what we think the price might be for each individual asset, but we're also compiling a database of comparable transactions. Because just to be quite clear, Resolute, we are not valuers. We're not going to follow a RICS methodology of valuing industrial asset in the middle of nowhere, because we're going to look at it on a liquidity basis, saying, okay, there might be a RICS formula to value this asset, but then we're looking at who's going to buy it in the next 3 months, who's going to buy it in the next 6 months.
So you're really looking at it in a very holistic context and a very environment-specific context.
Well, exactly. I mean, we're trying to expedite the sales as well. We're trying to speed up the process. So if we follow a typical valuation, or a book value on the bank, and it might be outdated, it's likely going to be overpriced. What we'll do, especially in the absence of a lack of comparable data, is in the Western Balkans and in Bulgaria, Romania, parts of Greece, certainly Serbia, there is no comparable data for an abandoned warehouse on the outskirts of a small town in the middle of nowhere.
Right.
So a lot of times we will speak to brokers and local businesses, and sometimes the conversation is, what do you think you could sell it for in 3 to 6 months? Knowing that the broker is going to be aligned because the broker wants a fee, and so the broker needs to tell us what they think they can sell that asset for, but within a limited time frame. So a lot of times it's as simple as getting that feedback from the market, because likely if all the banks owned was residential apartments in Sofia or Belgrade, they wouldn't need us.
Right. So you come in and you do the difficult, the dirty work.
Try to touch every asset, every piece of real estate. That's even on the little stuff. We have a 55,000 square meter shopping mall, mixed-use shopping mall office building on the Black Sea coast of Varna. That's a part of the same mandate that presents a whole nother unique set of problems for us to look at.
First of all, I'm fascinated by just the vision of you on a bus trundling across Bulgaria with a bunch of your colleagues, peeking in remote corners. That I can't even unsee.
We're not that price conscious.
But it's interesting on a sort of a more macro level that you felt that the market was quite frothy or busy before Corona in the distressed area, because there's a countervailing group of people who feel that by the end of 2019 in our neighborhood, Central and Eastern and Southeastern Europe, we'd really come to an end of, dare I say, product. I'll call it product, that really the distressed asset market was consolidating, condensing. The banks had cleaned a lot of their books in the preceding 8 years or so, and that there really was a diminution of activity. But you feel differently.
We're talking about two different things. I think if you're talking about portfolio buys versus individual asset activity within those portfolios, whether it's an institutional buyer who now owns a multi-asset granular portfolio, which they bought from a bank somewhere in the Balkans at 50 cents on the dollar, since COVID have obviously either stopped, slowed down, or are put on hold. But on an individual basis, just at the retail level, there are still individual apartments and plots of land and ground floor retail that are in the markets. They're in the property portals. In Resolute across Romania and Bulgaria, we manage, nearly 60 brokers that give us nationwide and regional coverage. So that's what I mean about plenty of work to be done in terms of preparing these individual granular portfolios on behalf of the owners of these large portfolios.
Interesting. And this is the lead up to Corona. And has this same quantity of work continued right through the various lockdowns and quarantines and, world falling off its axis that we've all experienced? Or have you seen a slowdown? Have you seen a change in the work?
Sure. I would be silly to try to convince you that the level of offers has been the same or that there's been an uptick in activity. It's just simply not the case. For us, we have seen a slowdown in offers received and or deals closed. Having said that, prior to COVID, we had a number of sales which are in the pipeline. So a lot of Resolute's workload, for example, in Bulgaria, has been to, let's say, tend to those buyers who had offers already going through the process, meaning from the point of signing preliminary contract on whatever piece of real estate they were buying, and many of them had already paid a deposit. So a lot of our work was, after the state of emergency started in Bulgaria, was dealing with these buyers on an individual basis. Fortunately, through the good work of our team, we didn't lose too many. I assume this was happening in other regions with other portfolios of granular real estate, but we were working with individual buyers who, if they required bank financing, either they asked us, can we sign an annex to the preliminary agreement, delaying this until ... until we know a bit more, until we know the bank's going to finance this purchase. That was taken on a case-by-case basis. But in terms of sales, yeah, in Bulgaria, obviously the offers haven't dried up, but year on year, an article came out today that April this year compared to April last year, 50% down.
50%. Interesting. You raise an interesting point, which kind of segues into the next step of our conversation. Obviously, pending transactions, as you said, many of them have continued, and this is true not only in Bulgaria, but across the entire CSEE region. But what you're pointing out is that a lot of buyers have included now financing contingencies, whereas that was not an issue before because, of course, banks are a bit more hesitant, or let's put it this way, a lot of the financing has been sort of frozen right now while banks evaluate their liquidity positions and, in general, the macro and microeconomics. Last year, I think in August, we kind of reached the whole apex of office space, office madness, and so on with the WeWork scenario. And I guess that kind of brought the whole how do people work now concept into relief, and people really started thinking about that. And I guess now we're going to start thinking about it again, because a lot of these open spaces for people to work and just in general offices were premised on a different business model. How do you see the whole commercial real estate sector coming out of COVID, in particular office space?
Well, in particular office space, just a quick snapshot in Bulgaria, in the office tower that we're managing in Varna, which is a secondary office destination, April and May, we had 100% success in collecting full rent. So the office tenants, and talking to various contacts and ex-colleagues and friends and so forth, they also had a fairly high success rate collecting from office tenants. Now retail is a whole nother discussion.
Yeah, we'll get to that. We'll get to that. Yeah.
We can dive into that. So far, office space, we've seen the tenants are paying. Perhaps it might be different in other jurisdictions where I'm not fully aware. But in Bulgaria, the state of emergency, the government did not ban going to work. So that wasn't part of the state of emergency. So if you wanted to go to your office, you could. I think maybe some tenants were able to negotiate discount based on social distancing, saying, look, we can only have 50% of our office for the next couple of months. Can we only pay 50% of the rent? I believe that was happening. But going forward, I can pontificate just like everyone else in the world is doing right now. And I don't know if I'm going to say anything unique, but I think we'll see the next 6 months is going to be sort of like a first date. It's going to be, what are they doing? This is awkward. Should I? No, I shouldn't. Maybe no. So it's going to be a bit, like an 8th grade first date where no one really knows, how this is going to play out. I think if there's a vaccine by the end of the year, that really depends. If we go back to a vaccine, you see after 9/11 and you see after 2008, people have very short memories. People forget the news fairly quickly. I was reading something the other day about 9/11, where then we were going to start seeing immediately everyone's going to go to suburban office space. And maybe they did for a bit, but then that quickly reversed. And then now it was more the urban office space that was back in style.
You raise a good point, the analogy with 9/11, because actually after 9/11, lower floors were more expensive than higher floors in office buildings. So it's quite interesting, those short-term changes.
I think the short-term changes, and people have short-term memories. Those of us who work in offices the last 2 to 3 months have realized that I am 80 to 85% as efficient working from home as I was from the office. And I think our owners of our companies and the CEOs of our companies and the decision makers are realizing that as well. So I don't yet know if this is going to be the death knell of the office space, but maybe it'll be companies will still want the office space, but I think companies will use the office space differently.
Interesting. How do you mean?
Meaning, let's have it as our clubhouse. Meaning, Denise, you and I work together. You stay at home, I'll stay at home. But you know what? Thursdays, let's go in and have some fun. And we turn it into more of a place to hang out and to catch up. Because I think what people missed during this time off or time away from the office, I should say, is that interaction and that social combustion, idea sharing and what can happen. Just the motivation of having that energy of your coworkers around.
So it's almost like we'll continue with this open space, open plan seating, that kind of the WeWork concept, but just less people, maybe less people there every day.
It could, and look, I mean, it's just one idea that I've heard businesses discuss. It's yet to be seen if the rent levels would be the same, but essentially you're going to take your Class A tenants who are going to still require the same space, but they're going to use it differently. Either it's going to be completely spread out so that it's absolutely feasible to do the 2-meter social distancing at work, or they completely revamp it and it turns into a clubhouse or a place to hang out with your coworkers.
What we're hearing from the States, from the behemoths like Amazon and Google and so on, is that they're going to reconfigure the locations of the space, because if people can be working from home, then they can be working from sort of offices, but in remote locations, maybe a variation on the suburban concept, but even not suburban, but exurban, or they could be sitting in Varna in an office. Not everybody has to be sitting in the middle of Sofia. There could be those changes.
Can you please tell Google then that I have plenty of disused industrial space in the middle of nowhere in Bulgaria that I could sell them?
This is what I was leading to. My next question for you was going to be, do you see an entire boom now of sort of remote working from formerly considered frontier locations, not only for call centers, but, for really core work?
Well, I think realistically, we in Bulgaria, Romania, and the Western Balkans, well, maybe less Romania, but Bulgaria and the Western Balkans, they're still just not the populations in these secondary cities to be attractive too much. There are 2 or 3 other cities in Bulgaria where that's feasible, maybe 2 in Serbia, but that's a stretch. Certainly not in Albania, Northern Macedonia. So yeah, it really is a capital city play.
Office space is different to retail space where you need the foot traffic. What do you see happening in the retail market in our neighborhood?
There's no question it is going to be a challenge going forward. What we're saying is likely the retail operators who were smarter before COVID-19, meaning they were already adjusting to this new world that retail had been looking at for the last 5 to 10 years due to the online retail space crowding them out. So I think you'll see the stronger retailers who were already positioning themselves to compete with the online market. They are the ones who are going to come out of here a bit, I don't want to say unscathed, but they will survive. Then I think there's the group of retailers who were struggling to hold on anyway, and they will really struggle to come out of the COVID-19. So the group of retailers who were struggling against the online space, this is not good for them. This is a double hit for them for sure.
What about the big box stores, the IKEA type of stores? There's rumors in the market that they're going to move to a smaller, well, they already started doing this in some jurisdictions, not completely discarding the big box, but setting up smaller stores in city centers that are both checkpoints to pick up goods that are ordered online, but also kind of showrooms, but smaller showrooms. Do you see that whole model changing as well?
You said it. It's already happening. I think we both read the same article and saw the same photo of that unit of IKEA in the center of Vienna, that they're doing more of a showroom style, sort of like a physical catalog, right? I think is the concept. And we've even seen that in Bulgaria. IKEA is doing that in Bulgaria. So yeah, absolutely. I believe that's coming. The other areas that will be interesting to watch will be the luxury retail, because I think that luxury retail has a heavy reliance on travel and tourism, meaning luxury retail in Sofia is relying on foreigners coming in and shopping, or the top 1% of buyers in Bulgaria. So I think the luxury retail space should be careful, given its reliance on travel and tourism. They should survive. It's more what we're worried about, it's the zombie
The high street
type
store
that should have gone out of business years ago anyway.
Yeah. Last time I was in Sofia, just before the whole corona crisis, I was in one of your larger malls there. It's one of the IKEA malls, which backs into a rather affluent residential area. And the idea there was they really had trouble getting anchor tenants. They had transformed an entire floor of the mall into a sort of destination activity center. There was a go-kart track, cinemas, restaurants, paintball, and so on. So it's almost like the shopping is ancillary to the whole activity. And the idea, I guess, is to keep people in the mall, even past store closing hours, and to make it kind of a destination. Are you seeing that kind of movement in your region?
Yeah, that's across the Western world, isn't it? That's across the world, and with shopping malls and retail with a shift to a focus on entertainment. Because if you look at Sofia alone, I mean, the competitive positioning, it's difficult depending on when you start and stop counting what makes up a shopping mall. I mean, there's 10 to 12 shopping malls in Sofia alone. And you're talking about the poorest capital city in the EU with 12 shopping malls. So the competitive position, it is very important, especially because that mall you mentioned is within a 10-minute drive of 5 other large shopping malls. So that space is becoming more and more competitive. The problem with COVID is it doesn't matter if you have Disney World inside of your shopping mall, it's still inside of a shopping mall, so you can't use it. So I think those types of competitive strategic decisions, first of all, they're expensive to repurpose your entertainment to meet the requirements of a post-corona non-vaccine world, where either you have to have outdoor seating with appropriate amount of distancing, or you adjust your business model and realize that your business model might have to take into account 2 months of no activity, 2 months of zero revenue.
Bulgaria has had a lot of investment, as has Central and Eastern Europe in general, from South African REITs. How are they faring in this? Because the South Africans have invested very heavily in the retail sector. Are they in for the long haul, or are they beginning to reconsider the wisdom of their investment?
I haven't heard sort of any market rumors I don't have any inside track on the South African REITs in terms of what they are strategically thinking. I do know that a few of the South African assets in Sofia particularly have, just prior to COVID-19, recently finished various refurbishments and upgrades to parts of their shopping centers in Sofia. So there's two things. The shopping malls are back open, so okay, not at the same revenues prior to COVID, but now they're at least able to transact again. And secondly, in Bulgaria, like many other countries in Europe, there is the loan moratorium for 6 months. So what we think is South African REITs, institutional investors, banks, they are spending, and they should spend the next 6 months undertaking several scenario analysis, portfolio segmentation, and active portfolio management across their portfolios.
How do you see us exiting from COVID? You raise a very important point. We're all in a sort of suspended animation right now to some extent because of the moratoria and enforcement deferrals. However, those will expire